Hello and good afternoon, everybody. Welcome to our live trading session. My name is Christian, and again, I would like to welcome everybody here from Hamburg. So thanks for joining me. It's been a couple of weeks since we last did that kind of trading session, but lately, I received a couple of calls and emails regarding our trading strategies, box trading and daily trading strategy. So I thought, all right, why don't we wrap it all up in a maybe 90 minutes or 2 hour live trading session, in which I'm going to set up a couple of trades at the market opening, which is due in 15 minutes time, and obviously we are going to talk about during the live trading session about a couple of setups, about where to place the traps, how to adjust the take profit. So all I wish for is decent market volatility, as I always do every day. So that is the plan for probably the next 90 or for the probably for the next 90 minutes, something like that. In order for me to save some time, because again, luckily we received a couple of emails. We had a couple of personal calls throughout the last weeks. So thanks very much again for joining, and let's get right into it. All right, so I'm sitting here in our office, and by the way, along with me is as a new trainee. His name is Justus. He asked me not to be shown in front of the camera. I don't know why, but actually he sits here with me along, and he's 18 years old. That's right. You go to school. You've just done your driving license, and you have a very keen interest in trading, I've heard, with 18 years. So well done, well done. I like that. I like that. So if I would have known what my profession is going to be in 30, 40 years time at the age of 18, then I can tell you my parents would be much happier. But they are now, so all good at the end. So hello, Richard. Hello, Mike. Good to see you. Greetings to Mallorca. And hello, Peter from Northern Ireland, I assume. And also, very warm welcome to our guests. I do presume that most of you have already watched us trade in a live trading room throughout the last couple of months. We had a personal call. Hello, Ganesh. Good to see you. So, nonetheless, if there's somebody here in the live trading room who has no idea what kind of trading strategy we are trading, please be patient. I try to explain it as good as possible. The main thing is, and I would like to begin with, hello, Philip. Good to see you. And I would like to begin with, with the fact that we here in Hamburg, as a Traders Club 24, we have very much specialized on our own trading strategies. That being said, we have developed a trading strategy. We call it it's box trading, BOX, as you can see here in the chart. So that's box trading, and sometimes I refer to it as a box. Sometimes I refer to it as a trap. It's the same. So apologies for any confusion caused up front. So our approach, especially when it comes to short-term trading, and by short-term trading I mean looking at the 1 minute or 5 minute time frame. So by doing the short-term trading, it is my experience from the last 20-25 years that it is very difficult, impossible, to say the least, to to really see a trend in the markets. So on longer time frames, on the daily one or 4-hour time frame, the weekly one, so that's possible. So the swing trading strategies, which we are using as well here at Traders Cup, so for taking some money out of the markets in swing trading, that is not that tricky as doing it on the 1 minute time frame. So we are not a big fan, or we are not big fans of using indicators or too many indicators in the charts on the 1 minute, 5 minute, or 50-minute time frame. So we are a bit reluctant to put all the indicators like the RSI, MACD, what else we have? Bollinger Bands, ATR, RAVI, and you name it. We are not a big fan of putting too many indicators into the chart. So we had to come up literally with a different approach of achieving a performance in the market. And that approach is that we are placing boxes or traps. So we are placing traps around key market levels and around key market levels, or basically saying around specific price levels in the market where we can expect the market to break out from. So it's kind of a different mental approach. So we are not longer saying, all right, I'm using this and this indicator, and then the market goes into that or that direction. It rises or it falls. So we are not directional traders, if you will. But on the short-term time frame, we are placing our traps, and then we try to trap the market in our box. And if the market breaks out to the top or breaks down to the bottom side, we don't care. And by saying we don't care, I mean that the market noise on the short-term time frame is usually that high that not always the first breakout of our trap will reach the take profit. It's not always the case. It's close to 70% the case, but not every time. So we have programmed a multiplicator in the Swissbox, and this gray tiny tool here in the chart, that is a multiplicator. So we've come up with a, is that my right? Bear with me. So here's another chart. So we come up with a multiplicator in our tool that regardless of any false breakout to either side, the tool will automatically place an order on the opposite side of our trap. So I'm going to show that to you real quick. So for instance, right here, that's the DAX. I've changed my MetaTrader to English language and with a box as well. So that's the DAX. It's currently trading at 124 points. So we've seen a bit of a good movement, and right now the big number of 15,000 it holds. So I go to the 1 minute time frame, and then I click here with my left mouse button, and we see two lines in the chart. The green one is a buy stop order line. The red one is a sell stop order line. Now, I can either place the box around the current market price, and step 2 would be to set up my settings, which would in result determine the position size of that trade. So if I would do this trade, I have a lot of 1, which means that if the DAX moves to if the DAX is going to move 1 point higher, I'm earning €1 on my account. And on the opposite side, if the DAX goes down by a point, then obviously I'm losing €1. So with your setting, you can you can have your own lot size for every single trade. Obviously, I do have my recommendation based on the experience, but if you have a demo account, I can only urge you or ask you to give it a try and to come up with some crazy settings like a percent, for instance, and you see how the lot size increases dramatically. So 34.3 would mean that if the DAX is going to rise by a single point, by only a single point, then we would earn 34 euros and 30 euro cents on it, which is massive, given the fact that the DAX in average has a daily range of 180 points. 180 points, that's the difference between the bottom and the high over the last couple of months. All right, so step 2, we are going to put in the risk and our risk settings. And lastly, we would hit the button entry. So just 3 steps for a box to place. Now, we can either place a box around the current market price, but we can also place a box around the key market level. So I can very easily take my mouse and then we could put it down here. It's a big number of 15,000. I can put it up here. So that's up to me, that's up to you. And I just want to show you that we can move the box very freely here in the chart. We can also increase the size of the box, and I can reduce the difference between both order lines. So given the fact that we are trading not only the DAX, but also the UK 100, which is basically the FTSE. So in the morning hours, we trade the DAX and the FTSE, and in the afternoon, so right now, I'm more concentrating on the Dow Jones and on the Nasdaq. So every market has its individual box size. As a rule of thumb, we take the index level from the right-hand side and we divide it by 1,000. So that being said, I'm taking my box out of the market here because I'm not so much focusing on the DAX right now, and I'm shifting to my market overview. Before we are going to start, and the market opening in the Dow Jones and Nasdaq will be approximately in 2 minutes time, I wanted to show you a very important market level. Now everybody knows that the stock prices have come down over the last couple of weeks, and as an investor, these are not good times. So I had a couple nights bad sleep, but as a trader, I very much like the volatility which is currently provided by the market. Now, I've used my Fibonacci indicator here for the Dow Jones on the daily time frame, just to get a glimpse of where the market currently is. Now, I don't want to go too much in detail here because I'm not a technical analysis, and I'm letting others do this job to find chart patterns in the chart. But still, I'd like to look on the chart and to see where it is. So using the Fibonacci here, by pulling it from the very bottom to the very top on the Dow Jones, we see that the 38.2 Fibonacci retracement is around the big number of 33,000. So that is, again, not only the DAX of 15,000, but in the Dow Jones 33,000. So that's a key market level, and we are going to see over the next moments if we are going to fall below the big number of 32,000. So I'm pretty sure that we are going to trade a couple times the big number here. So that being said, I'm going to put the Fibonacci away, because it's just nice to look at, but not really. It doesn't give me any advantage by having it open on the short-term time frame. Right. So I have the US Tech here on the right-hand side, and I'd like to start with a Dow Jones first. 3 minutes to go, so here's that sign for me to get in to my first couple of trades. So I hope you can see it well, and yeah, I hope you can see it very well. So I've 3 times right next to each other, I've opened up the Dow Jones on the 1 minute time frame, and for every time frame I'm using the Power Zone DAX template in here. So on the left hand side, I'm only looking for the market to be in box number 1. Yeah, I hope you can see it here. I'm using some sort of a grid, which gives me the advantage of any market volatility. So I'm not really looking heavily on any trading signals like the Vola box or the blue box or the big number, but especially in the first couple of minutes, I'm just using the market volatility to get me into the trades. And I think that's for that, using the Swiss box is just a great tool, because regardless of the direction, I'm trying to get into the market here. So we are going to start off with that trade here in the middle. For that, I've placed my box or my trap around that section around 0.3. And so I did this trade. The market went into my box just briefly, just for a very tiny moment, and it broke out. We've seen, we now see that bullish candle in here, and this bullish candle has been trading beyond the blue dashed line. Yeah. So the blue dashed line, that's my first take profit. And if I would have concentrated a little bit more on trading and not talking so much, I would have gotten out of the trade once the market was coming down again. So everything which is beyond my first take profit, and I can adjust my blue take profit line. So anything from here to here is an additional bonus, additional profit to the trade. I'm only calculating with this one right now. And if the market is coming down, usually, not always, but usually I'm not letting this kind of trade, I'm not letting it taking my profits away. So even though if we are just in the first trade, there's still a very high chance of the market coming down and then triggering my sell stop order down here. So in the trading terminal, and again, I'm not very much concentrating on trading, but more on the explanation. So down here, that's where my, that's the one. Here's another sell stop order, and it's placed right here on this market level. So as I think, Richard, I mentioned to you the example with that bottle of champagne. So if we are going to shake that bottle of champagne, there's some pressure coming into it, and sooner or later it will pop. And so I think this is a great example to describe this box trading strategy. So yeah, let me take that off here, and I'm going to close that trade. Again, we are beyond the blue dashed line, and if the market would come down, here would be my mental stop loss. Mental stop loss, yeah, okay. I could also use a break even, which is a feature programmed here into the Swiss box as well. But yeah, my opinion is as long as I'm sitting in front of the computer, I'm happy to close out the trade and taking the profit, which is currently €25 or 0.04% of my account balance. So I'm going to do that right now, and I'm bringing the chart back into the overview. Now let's take a quick look at the market here on the left-hand side. We are still in the Dow Jones, and the scenario here is a bit different. So we have been triggered on the long side, on the top side of our box. Even though you don't see the candle trading outside of the box, I can assure you that the spread has triggered this buy stop order, which is a bit unfortunate. But still, we are in the second trade now, and so my blue dashed line is on the bottom side of the market. And so if the market is coming down, so it needs to fall below the big number, very big number indeed, of the 33,000 point mark. So anything below here would get, I would get interested into that, and either adjusting my take profit a bit further, or if the market is coming down to the first take profit to the blue dashed line, then I would very likely close out that trade. I'm putting my trading terminal a bit farther away. So what I'm basically looking for now is for the Dow Jones to decide for itself for any movement to either side. But as long as it's staying around the area where it currently is, and so I'm not getting a lot of additional trading chances here. 33,000. There's also a what is it? It's a purple line in here, and that purple line shows me the high. It shows me the opening price of the Dow Jones. I have a couple of other indicators in here showing me the big number. I do have the high and low of the market, and so right now we see a little upward movement here, and box number 1, so that's active here on the left hand side. So I'm placing my box around point number 3, and again the box size, so the line difference between the green and the red one, I've set it to 32 points. Again, you take the index, or we take the index level, which is 33,000, and we divide by 1,000. So actually I should set it to 33, but don't worry. So that single point doesn't do any harm. Okay, so that's my box in here. Now, when it comes to the risk, I think we have set up, or we've come up with a great feature, and it tells you how many trades are available for a single trade. So with my kind of settings, with the kind of box size, with the account size, with the leverage on the account, so all these factors do account for a specific number of trades I can do. And right here, I could do 10 trades. So to give you just a bit of an overview here, so what's very important here is a line down here, the loss in percent. So let's say that I've hit a market, or I've set my box at a condition where there's no volatility going on, and I've been triggered first on the long side with my second trade on the short side, and the market turns again, and I'm short, and I'm long on the third trade, and short on the fourth trade, and maybe long on the fifth trade again. So at that point of time, when I'm in the fifth trade, I do have experienced a loss on my account of 0.32%, which is, I think it's fair. So it's a fair loss. Then I do have the option, of course, of closing the trade, because again, I've placed my box around the market situation where I shouldn't have done it, very likely. Or we could just close our eyes, and then we would wait for the sixth trade, for the seventh trade, for the eighth trade, for the ninth trade, and for the 10th trade, and you see the increase of the potential loss in here. So we as trading coaches, we have a very strict rule, and that rule is to say that we either close the trade after the fifth, or, as I'm usually a very optimistic person, And I don't see things black and white. So I usually do the kind of trade that once I'm in the fifth trade, I very heavily look onto the market. I'm going to double check any fundamental news calendar in order for me to find a very good reason to do a sixth trade. So I need to have a very good reason to enter a sixth trade. If that's not happening, I'm very happy to either close the trade or to pause the trade. To pause or to hedge a trade literally means that our Swissbox tool is opening up a new trade, which will put your whole trade, first, second, third, fourth trade, everything which is combined in that single box trade, it puts it at an equilibrium. Tricky word. So your profit or your loss at that given time, once you press the hedge button, is sort of frozen. And then at a later point of time, or maybe the very next day, when there's more volatility coming into the market, then we would look out for a trading signal to release the trade or to get back into our trade, if that makes sense. Unfortunately, Richard, we don't have any PDF with any recommendations about the settings. But it's not that tricky. We'll have a phone conversation maybe later this week or next week, and then I'm happy to give you all the settings. All right. So that's basically when it comes to box trading. I'm not talking about our daily strategies. I'm not talking about the weekly trading strategies here, but just purely about box trading. I do have the time because the market, the Dow Jones, is literally at a standstill, 33,000 and currently trading at 25 points. So far, the Dow Jones have failed to recover from yesterday's drop, and so it was bank holiday. Nonetheless, I was closely following the markets yesterday, and it wasn't a great day. Wasn't a great day for being a long-term investor. So for the sake of that, I was very much looking for a counter move to the top side. But yeah, so far it's not giving me a lot of trading chances here. So yeah, so far so good. Now let's have a quick look at another market, because we are not just doing the DAX, but we can also trade the Nasdaq. The Nasdaq is one of the markets we do like to trade because it's a market with a high volatility. That being said, we don't do any trading in what do we have in the Euro stocks, or we don't trade the S&P. Even though the S&P is a decent market for being a long-term investor, but for a short-term trader, we don't really have an advantage, a statistical advantage here in the market, because the volatility in regards to the spread, or the spread is basically the cost of trading, we don't have a statistical advantage here. So that's why you never see us do any trades. It's actually very similar for the reason we do not trade Bitcoin. Bitcoin does have a very high volatility. On the other hand, the spread is enormous, and yeah, as a trader, we need to take a look at the trading costs, and so we do not have any statistical advantage of being successful with our box trading strategy. And so simply we said, no, we don't use that market, even though we get a lot of requests trading Bitcoin. But yeah, okay. So I'm just putting out my grid overview here. And when it comes when it comes to the Nasdaq. Sorry, I'm just getting into the market here again, and I'm looking for a decent price level where to place my box. I think it would be so the key market level of 14,700 is quite a decent one. Yeah, where to enter the box. So I must not forget about my trade here on the left-hand side. Now there's a little bit of market movement. And please take a look here. We are below the blue dashed line with a forced trade. So keep in mind the overall overview of how many trades you can do. So if you're in the forced trades, we shouldn't gamble a lot. We should take out the trade. We should accept the profit and rather placing a new box. Yeah. So when it comes that we are in the fourth trade, in the fifth trade, so adjusting the blue line and not just leaving the trade with 2 euros, with 5 euros. I think it's important to adjust the blue line by a couple of points. But on the flip side, you shouldn't be too greedy because as my trading rule is to pause the trade after the fifth one. I think I'd rather take my profits here and place a new box again. So right now, around this market level here, we have a topping zone around here, and once, twice, maybe a bottom zone around here. So I'm very happy with the fact where my box is, and as the opposite box, I've placed it on the very top around today's market opening. So we are currently in the market for 13 minutes. It's not too crazy of a market. The two trades hits, take profit, and maybe in just a couple of seconds time, this trade is going to get triggered here on the red line, and then my blue line, which is a take profit line, it will jump from up here to down here. Khaldun, when I use this indicator, can I add any orders manually? Yes, yeah, of course. Of course you can do that. Thanks for your question. Now, I can only assume that most of you are familiar with the MetaTrader. If not, we do have a couple of videos explaining the trading platform here, and yeah, it's like riding a bike. So if you can do a mountain bike, you can do a cross bike. So it's it's something which everybody can learn. Trust me on that. So we use the Swissbox mainly as an order tool, Khaldun, but of course you can set up your trades manually. So there's a button up here. It's called New Order. It's like the UK pop band from the 90s. A great pop band, by the way. New Order. Just a little side info here. So you can place your trades manually here using that window. I think that's the right answer to your question. So clicking here, or you can enter with a market order. You can do a pending order, of course. So placing any buy limit, sell limit, buy stop, and sell stop. Yeah. So, all right. So the market is coming back to the big number here, and coming back to the big number. And let me have a look at the Nasdaq. So market's coming up as well. Could be a little double top here. Either way, So manually we could place our box here, or we could enlarge it a little bit. By the way, so the higher the box size, the more trades you have available. So the smaller the box size, on the opposite, the smaller the box size, the less trades you have available. So keep that in mind if you're playing around with your demo or maybe live account. So with the NASDAQ, we usually use a 15-point box, and that would be my next entry here. So once I see a new daily high in the NASDAQ, the question for me whether this upward trend will continue or if the market's just going to hit a big number and then it's coming all the way back down again. So up here or on the big number down here. So these are the next entry levels for the NASDAQ, which I'm going to set up right now. So I'm taking one box up here and the second box down here. So I'm not using the grid, but just the big number, the 14,600, and I'm happy to place my box here. So as some sort of preparation, you don't necessarily have to look at the market that intensively at the market opening, but you can prepare yourself even a couple minutes before placing the traps. So you can do that not only with the market opening, but if you're trading any news-related events. Keep in mind that on Friday this week, that's 1:30 UK time, we do have the non-farm payrolls announcement. So we had the younger sister, the ADP numbers coming out today. So new job numbers came in a bit disappointing, but yeah, that's just the younger sister. The real announcement is obviously on Friday. And if you would like to give it a go, I'm not a big fan of placing the box around the market price, but we should rather than place the boxes on different charts, on different levels. So not around the current market price, then you will very likely to experience a bit of slippage. So if you place your box so the news are coming out at 1:30. So if you would place your box at 1:29, and then the very first impulse will very likely give you a lot of slippage. So that's why I'd rather place my boxes below and above the market price at a fair distance of 30 points, something like that. Okay. No market reaction here from the Dow Jones. We're in the second trade. We are short, and that's the blue line over here. Of course, if you are not happy with that trade, I mean, you can just hit the close all button, and then all the trades will be closed out automatically. I mean, that's why it says close all. Okay, so if the volatility in the market, it's not coming to a standstill, but it's currently waiting for something bigger, I do feel. We're in the third trade here, and I have to adjust my take profit again. So when we are not just trading the market opening at 8 a.m. UK time or 2:30 p.m. UK time every day, we look for additional trading signals, and these additional trading signals they can be displayed in either using our Volabox algorithm, and the Volabox algorithm looks for key market levels where we expect the market not to stay for a long time, but quite the opposite. So whenever the market, no matter if it's the DAX or the FTSE or the Dow Jones or the NASDAQ or gold, whenever the market is coming into a Volabox, we are placing our box on these market levels. So literally on top of it, and then we are waiting for any breakout. So we are looking out for Waller box trading signals. We are looking out to trade big numbers, and we are also looking to trade some currencies. And for doing currencies, we rather focus on using our blue box trading system. And the blue box trading system gives you these boxes or zones automatically in the chart. You don't have to do anything. Once you like a signal, you just have to open up a separate chart, put the Swiss box in it, and then place it on top of the blue box. So with our blue box system, we are very much looking for major currencies, as well as the DAX and Dow Jones and Nasdaq. So everything with just blue here on the left-hand side, that's a Waller box. I'm not saying it's a great or a bad blue box. I'm just saying that there is a box, and any gray or black market is an old trading signal, so no need for us to look into it. And the orange box, so that's an emerging signal. We take this as an example here. So that is the Euro-yen on the M5 time frame, and we see this little up and down here. So it tells me that the market is currently in a state of maybe some sort of calmness or equilibrium. And the problem with that box is it's too high. So for that given time frame, having a box with that size of 38.7 pips, it's way too high. So we are very much looking for boxes, especially on the 1 minute time frame, up to 15 points. When you take the DAX, it's around 25-ish points up to 30. So that was not a good box. 53 points, definitely not a good box. And we rather prefer these 23 or 25 point boxes on the 1 minute time frame. So these are all additional trading signals we are using throughout the trading day, and obviously not just throughout the trading day, but within our given trading times. No worries. Hello, Sean. All good. No. Glad to have you here in the session. So the trading time would be from obviously, and I say that in UK time, 8 a.m. to say 8 to 9, maybe 9:30. It could be up to 10 a.m. in the morning. So everything around the market opening, and in the afternoon, it's usually it's a trading time of having 30 minutes up to 60 minutes. So 2:30 to 3:30. So that would be my recommendation. And based on our experience, not today, unfortunately not today, but usually there's a very good volatility in the market, which should trigger approximately 10 to 20 boxes in a single trading session. So I'm not a big fan of doing any trading during the lunch break or in the evening. I'm just not, and so these are two trading times, in the morning and in the afternoon, where we are placing our traps. So, all right. So maybe the Dow Jones could be so nice and give us a little bit of market movement here. Again, I was reluctant to close my trade. Otherwise, we would have been out of the trade once the market has hit our take profit. So I'm going to hit the auto button here. And so the next time the market is going up, it will be closed. So I'm just trying to be a little greedy, not too much. But you see how these numbers here, So that's a profit. How these numbers are going to change the farther away you're putting the blue line. Now, that being said, please keep in mind that the red dotted line here, the red dotted line is some sort of a urgency stop loss for the short trade. As we are in the third trade, so we are first trade long, second trade short, third trade long again. We have 3 trades here open at the moment. And so for any reason, if there would be something terrible going on, that is my urgency stop loss on the top side for that short trade. And here would be my urgency stop loss for these 2 long trades. So if you're pulling your take profit and taking it beyond any red dotted line, it would mean that once the market is going to go up, my short trade, my second short trade would be closed automatically down here, and I would only have a net long position from the first trade and from the third trade. Now, if the market keeps on climbing, everything is fine because I've got rid of the second short trade, which would be a losing trade. But if the market is volatile and if for whatever reason, if there will be a jump from up here to down here, then I'm missing my second short trade to offset that market move. So what I'm trying to say, it's a bit risky to adjust the adjusted take profit. Hang on. Okay, now I'm in the fourth trade. So it's a bit risky for me putting the take profit beyond it, which is only a good idea if I'm really focusing on the trade, if I'm looking at the market. But for instance, if the doorbell would ring, so I wouldn't leave my trading desk here right now. In that case, if I have it here, no problem. All good. I can go and say hello to the Amazon man, for instance. So all good. But if you have it here, I would strongly recommend to be in front of your trading desk. Now, Dow Jones coming down just a bit, and I would use this. So I would use the exit on the left-hand side to trigger trigger a new box on the right-hand side. Oh, sorry, that was a mistake. Not around 0.1, because I'm already doing this one, but down here. That's where I'm going to place a new trap. So the trigger on the left-hand side for the take profit would almost instantly trigger my box on the right-hand side. All right. Just skipping over to the Nasdaq here. So market is coming down, but right now, not so far to trigger our box here. So I'm going to put all these additional information into the chart as well. Just a couple of points. So for instance, if the Nasdaq wouldn't trigger neither box at the end of the trading session or trading day, obviously you can just hit close all, and then you could take the box out of the chart, which is it sounds funny, but as a trader, you need to make sure not just to shut down the MetaTrader at the end of the trading session, but yeah, to double check if you have any open positions still in the terminal, or if you have placed any boxes in the chart. So yeah, that's I know that from experience, to just make sure you have disabled or taken all of the boxes out of the chart before you end the trading session. So as yeah, so we do have a template. It's called the Trade Radar Vola box. You see it here on the top left corner. So the main duty of the Trade Radar Vola box is to give me a signal, even an acoustic signal, once any given market has moved into a Vola box. But it also tells me on the top side if there are some pending boxes, if there are any active boxes, and how many boxes I've closed during my trading session. And so far, 2 closed boxes it's nothing. But we are waiting. We are patient, and we hang on. But yeah, so there's an acoustic signal from your computer right away. So the DAX unfortunately hasn't triggered our Vola box. So that means that the Dow Jones is also is rising at the same time. So usually Dow Jones and the FTSE and the DAX, they tend to trade into the same direction. So there's a very strong correlation for these stock indices, as you might know. All right. Right, so down here. All right, is there something you would like to know from my side? So I tried to be as thorough with my explanation as possible, but maybe I've missed something. Thank you, Richard. You expecting me? Yeah, on average, it's so if you take the market opening trading session and the afternoon trading session, I think anything between 10 to 30 trades. 10 to 30. So usually in the morning we do have we do the market opening, we do have a couple of big number trades, Vola box trades. I would say it's 5 to 10 trades in the morning on average. 5 to 10 trades in the morning, and then 10 to 20 trades in the afternoon on average. So gets a bit interesting here. Now look at that. The Dow Jones has finally decided to come down. All right, so we hit our take profit, the blue dashed line, and very careful here for the market. So it wants to come down, great, but if it's going up, yeah, thank you. So I'm taking that trade, and for the market being in that market zone or around this market level has triggered my trap number 2 on the right hand side. And we are now long in the market with the first trade. And keep in mind the trading position with the first trade, second trade, it's relatively small. So referring to the multiplicator, we like to build up our trading position. So if there's more pressure in the market, we'd like to have it or to play it out with a bigger box size. Sorry, not with a box size, but with a position size. All right, so the market is now going up, and this time I'm not adjusting, or maybe, so that's my take profit. I'm not adjusting it. Have a look how the box reacts once the market price hits the blue take profit line. Switching to the Nasdaq real quick, and we'll see the market has come to the big number of 14,700 points, and we are in the first trade long. First trade long, and yeah, I'm adjusting my take profit slightly. Let's take a look at my trading terminal. So we do have two separate trades going on right now. One is in the US Tech, which is short for the Nasdaq, and the other one is in the Dow Jones, or DJ30, as a broker has named the market. Let's put it away, and right. So if you ask, what, Christian, what are you doing in the afternoon? So that's basically the question. So if I'm not talking to you or talking to my fellow trading coaches, I'm looking at the market. Can you trail a stop? Yes, Richard, I can do that as well. I can do that as well. I'm not a huge fan. I'm not a huge fan of doing that, but now let's open up the chart. So if I'm adjusting my take profit to up here, for instance, or here, so that's the daily high. Here's the green, sorry, the yellow line. If the market is going to go up here, then I could either take my, so here's that red line, that's my urgency stop loss. So I can modify it by clicking the Alt button, ALT, on my keyboard, and then using the left mouse button to pull it a bit closer. So that's one way to do it, or one way of doing it, or we can, we can use the break-even function in the Swissbox. So once the market is trading beyond the blue dashed line, at that point we have reached 0.02%, and so if I'm entering, say, so I can do that, and I will be able to enable the button once the market actually is trading beyond my my take profit, my initial one. And then if the market, if it's in theory all the way coming back down, then the order would be triggered on the way back here at the break even. So that's some sort of a trading stop, if you will. Yeah. So if does that answer your question? I hope so. So by the way, all of you, if you, so hitting the Alt button on the keyboard, if that's something you, perfect. If that's something you don't want to do every time, you can click on Tools on the very top in the menu bar. You go to Options, and we'll go to, oh, where are we? Here. Under the tab Charts, you just need to uncheck this function. And by unchecking it, you can just move any line in the chart with your left mouse button. So that obviously causes a little bit of trouble sometimes, and so we rather leave the alt function enabled to avoid being in the chart and looking at different time frames, switching between the open charts and just playing with your mouse literally somewhere, and accidentally you have hit or you have adjusted an order line which wasn't meant to be. So that's the reason why we usually have it enabled, the alt function. Okay. So it's been close, and yeah, it's been close. Maybe if we would have set it to auto, we would have been out of the trade, but yeah, it's just a wood. So let me adjust it here slightly. That's the Dow Jones in here. If the market is going to come down again, I'm looking out for, sorry, so that's box number 2 here on the left hand side and box number 2 on the right hand side. So I should rather focus on setting up the box around here. And then we would have 2 boxes trading at the same time. See how the, we are out of the US tech trade with our adjusted take profit. So I have the, let me put it in here. So our broker GBE, they have some fancy additional tools. Order history. All right, so here's a tool, and it just displays your point of entry and your point of exit. And so here's that green line, entry and exit. Simple stuff. And again, I'm using the big number. We do trade the big number at a maximum of 3 times per day. So again, placing the big number down here at the level of 14,600. That's something I'm doing. Placing the box, I'm fine with my risk, and then I'm hitting the entry button. All right. Right, so you are still all good?
Yes.
Okay. Okay, good. I'm just talking to my trainee here. Genau, also wenn du sagst, okay, reicht, dann kannst du gerne rübergehen. Also wir warten. Ist okay?
Ja, klar.
Alles okay, okay, okay. Ah, okay. Ich verstehe. Ich verstehe. Ah, na, alles gut, alles gut, alles gut. Okay. Right. So, yeah, I just wanted to check on the trainee here if he's still with me, and he is. He just mentioned he's actually using our analysis to trade on his mobile phone. Which, okay. Now, one thing which pops into my mind, Richard, is your email from yesterday. So you sent me a video where the market, the Dow Jones, was trading beyond the blue line, and the position hasn't been closed automatically. Now, so that would be if the market is trading up here and the position would be still open. So you can take out the lock. Again, that's some sort of a safety function here in the Swiss box. Now, if you are taking out the locks, you can disable the exit. So by disabling the exit, the trade will go on for literally ever in your direction. So I'm pretty so that would be my best guess, that you have disabled the exit option. Yeah, so that's something we can do. We can also do something else. So if you see, so just something crazy. So we all know now that our sell stop order is located on the blue line here. So if the market is coming down at the red line, there's another sell stop order, and we would be in the second trade here. Now, if you say, all right, maybe there's just an overreaction from the market, and I'm still a very strong believer that the market is going to go up again. I don't want my order to be executed down here. So if that's the case, of course, you can disable the entry. Yeah. See, these are two buttons which you can play with. I do not recommend doing it, but you can disable the exit and the entry. However, if you are doing the entry one, please make sure that the Swissbox has already placed the sell stop down here. So by hitting the entry button and disabling this feature would prevent the box from, once coming down, from placing the next order at the green line. So the Swissbox is always thinking one step ahead of you. Yeah, if this makes sense. All right, so be careful with entry and exit. Or at least if you give it a try, make sure it's on a demo account. So usually all the things I'm playing with is the auto and the custom button here. Right. Okay, so we're double checking the markets. Our traps are placed. Nothing crazy going on today. Just a regular Wednesday afternoon here in Germany. Now let's see what happens here. We have a low of a candle, second low on the exact same price level, then a third time. Now the market is coming down again. Looks like a chair to me, which can also be described in a couple of trading books as a 1-2-3 trading formation, which is nice to look at. So once the market is coming into the box, now it gets activated. See, it says flat pending here on the right hand side. And once the market is breaking out, now we are actually in the first trade. As long as the market is trading in this yellowish zone here and it hasn't broken out to either side, you can, of course, take the box or you can take the trap out without losing any money. But once the market is trading outside of the box, like we see here, back at 32,920 points, then the first trade is placed and we are underway. So we have two boxes trading at the same time. We are long on the left-hand side. We are long on the right-hand side. It's the first trade. And just making sure that these are not the identical boxes, but they are different boxes. So it's, yeah, different boxes. And again, this is the idea behind this kind of grid trading. So we are not looking out for Vola box indicators. Adjusting the zone to the Dow Jones. So this is some sort of a Vola box down here. Going to a different time frame. So see, up here there are a lot of Vola boxes. I don't think that we are going to reach these price levels today, but it doesn't matter. They are still displayed. They are yeah, still displayed. They will update themselves every 60 minutes automatically. Don't have to do anything. And if you're breaking it down, going into the time frame here, we see that, yeah, the current Vola box is around the big number. It's not about, it's not around the big number, but it's it's just a regular Vola box down here. And so we can either use our grid for setting up the box, or we can use the Vola box. So first trade long, that's where we are currently, and on the right hand side we need to have the market come down. So it's a bit of an opposite market move, or a bit opposite of what we are currently hoping, what the market will do next. And yeah, so this is, oh, have a look, and we are out of the Nasdaq for a second time today. Again, it's the first trade where we got off, so position size is small, but yeah, that's the way it is. So I'm also checking the blue box trade radar to see if there are any interesting boxes here in the radar, but so nothing going on the M1 time frame, so no blue or orange signal here. And for the M5 time frame, we do see something in the cable, British pound US dollar, and yeah, so but it's a box which is still orange, and it has a box height of 65.8 points. That's usually at some days it's the average overall distance here, so it's way too high. Do not trade it. Do not trade it. So same goes for the euro dollar, and so we do have a blue box here, 33 points, still a bit too high. So sorry about that. And yeah, so no valid trading signals from the blue box. Okay. Now, right, Richard, have you tried the hedge function on a demo account? Or Peter, have you used this kind of button? No. Okay. So no, in a good way, that you have never experienced the market drying up or getting out of volatility. So all of your trades have been closed before the fifth or sixth trade then, I assume. Okay. Okay, good. Well, all right. Either way. So I would like to show you the function of to pause a trade. Yes, I did, but left it too long to hedge. Okay. So the market's coming down, 32,888 points, whatever. We are short in the second trade with our box here on the left. We are short in the second trade with our box on the right. I'm using the chart to show you how we are hedging the trade. So right now, the market has broken out. We have not yet reached our take profit to the full extent, but I mean, we can pause the trade whenever we like. So I'm clicking on that button, and instantly, we do see three new buttons here. Two pendings, buy and sell. But let's take a look at the trading terminal here. Oh, bless you. So we need to keep in mind that we still have a very similar trade open from the first chart, but I think here we are. Okay. So with my mouse, I can go over to that comment section here on the right-hand side. And if you do not see that comment section in your trading section, then you may have to right-click and to enable comments, just in case you don't see it. So you have to enable comments. All right. And then when you click on it, you go with your mouse over that comment, and you leave the mouse there for a couple of moments. You see on the right-hand side, ID 6002. So I hope you see it. So 6. Mark, what do you mean by interesting? Haven't you used it before? You should have. You should have. All right. Right. So you leave it here, and then you see the ID. So by default, we can only use the Swiss box with one unique magic number in a single market. So if you try to open up a second market and you'd like to put in the Swiss box again without using a new identifier or a magic number, you are very likely to get an error message. So the idea of having multiple charts with multiple boxes is by changing the magic number up here. And so this magic number acts as some sort of an identifier for the box to find the trades down in the MetaTrader, in the trading terminal. And so even when I have accidentally closed the market, but the order is still active, and trust me, that happens far more often than it should have happened. But yeah, in that case, the club members, they call us and we help them out. So just in case, if you have closed a chart, the market is still open, and you would like to reopen the chart, you would like to reopen up the template and the Swiss box, please make sure that you take your mouse, you go down to the comment section, and you look out for that ID number of that open trade. And you will then put that open trade, you will then put that ID number into your Swiss box. I see, all right. Right, so that's how you can identify the trades which belong to that certain trade. The grid, sorry, I'm looking for that trade. HAT, that's a clear indication that this one is the hedge trade. And this trade managed to find a position size between my buy and between my sell order. I'm going to explain that to you here in detail. So the magic number is 6002. So that's not. Let's look out for the trade. So here, that's my first trade. That is my second trade, and that is the according hedge trade. Yeah, first, second, and that's the hedge trade. So the difference of size or in size of position between my first buy order, the second sell order, is 0.70. So once I hit the hedge button, it opened up a new trade, and now I have a overall position size of one lot, and I have a sell position size of overall one lot. So there's nothing going to happen from this point of view or from this trade here in my account. And if I would like to enable my trade again. And if I have a very strong opinion that the market is going to rise, then I press the buy button. If the market is coming down and you would like to enter another short order, then you would simply hit the sell button. We'll see. All right, so the market, not this one, but actually, see. So the trades have disappeared down here. That means that the market, the Dow Jones, from the left-hand side, from the first box, has all the way come back. It has all the way moved back to the top side. It triggered our blue line automatically, the take profit. So I didn't have the chance to adjust my take profit. But yeah, so taking the take profit either way is a good thing. And coming back to the market here. So you go, or you press a buy button if the market is going up. You press a sell button if the market is going to go down. And if you are not sure, or if you would like to use the Vola box signal or the blue box signal, or a given big number to get back into the trade, then you would hit the two pendings order. The two pendings order, the most interesting one. They are literally going to take your original box down here, 32 points. So they are going to take that box, they put it around the current market level. So you have a distance of 16 points to the top, to the green line, 16 points to the red line on the bottom. And then you would simply wait for the market to break out of your box. That's what the two pending button is all about. So if you're not sure about the next market move, you just do the two pendings, and then you wait for the market to take over the next decision of market move for you. And obviously we are not just hitting the two pendings at any given time, but we very strongly recommend looking out for the market opening or for any Vola box trading signal. And sometimes this means that we have to shift the trade to the next day. By doing so, we would of course have to pay some swaps to the broker. But I mean, it's a couple of euros. But sometimes taking the trade to the next day is a good thing. As an alternative, you just have to close the trade. So if you take it for the day, that's fine. But please do not take it for a week. Or don't leave it open over the weekend. That's something which we do not recommend. Otherwise, the swaps would be too high. But just for a single day, there's no harm doing it. My personal opinion. All right. So we are hedged. See down the number down here, 266, 267. So that's literally it's frozen, and I'm not waiting for a decent signal to get back into the trade. All right. What time is it? It's 20 minutes to 5 here in Germany. All right. Yeah, I'm just doing this kind of trade. So we do not have any proper setup. I think that is very clear, that we do not have a proper setup for re-entering the trade with our box. But just for the sake of it, I'm hitting two pendings. See, the box jumped to around the current market price. Down here, there are my pending orders, buy stop and sell stop, and the Dow Jones needs to come out of the box here right now. Yeah, so that's the idea of pausing a trade and not just blindly letting any trade swinging swinging it up, yeah, oh yeah, and not just letting any trades go sideways into a dry market where nothing is going on. So this is the, from my point of view, this is the only tricky thing when we use this trading strategy, that you always need to make sure that your overall risk, that of course you manage it by having a very mental stop loss in the market, or mentally stop loss in the market, by saying, all right, so once the market goes into, we go one step back, we have 10 trades available in total. So our recommendation would always be to close or to hedge the trade in the fifth. If, however, we have a very strong opinion about the next couple of minutes that the volatility will come into the market, then I'm absolutely happy to risk a sixth trade in here. But if that's not the case, we are very likely to pause or to hedge the trade. Right, so this is some sort of a mental stop in here. If you say, I'm not good at making trading decisions myself, you can, of course, use this function here in the Swiss box. It's called maximum loss, and see, the name speaks for itself. You can type in the number like 10%, or actually, it's way too high. 0.10%, 0.12% in here, and you can enable this button. Just make sure that, what does it actually mean, 0.12? It actually means that it would do you a third trade, and before, just very shortly before a fourth trade would have been opened, or would have opened, or would have, would open, then you would go out of the market. So make sure you take any appropriate number in here, and make sure to double check with your overall trading availability. All right, so this is box trading in a nutshell. So I'm not going to set up any more trades. I thought that it's some sort of a trading lesson for you. Coming back to my last trade. So the last trade obviously is was our hedge trade. The market came out to the top side, and again you see the blue line here in the chart, which of course can be adjusted. And on the flip side, there is my opposite order, the sell stop. And I'm just seeing that, oh wow, see the Nasdaq, oh wow, that's good. The Nasdaq has rallied all the way back up 100 points over the last couple of minutes, and it has executed our big number trade, which was still there in the chart. I'm not moving my take profit away, but yeah, make sure that there are no open boxes in the chart before you shut down the MetaTrader or the computer. You're talking about shutting down something. Yeah, make sure that when you do the box trading, that your computer is not shutting off or is not going into any pause modus. I'm pretty sure there's a better English word for that, but energy saving modus. So make sure that you adjust your computer settings accordingly, that it doesn't turn off maybe after an hour or so. So we are patiently waiting for the market to hit the blue line in the Nasdaq, which should And we do have the Dow Jones trade at the same time. Now we are short in the fourth trade. So I took it a bit too lightly of just placing the two pending orders at the price level where I did, because there was clearly, obvious and clearly no trading signal for us. But yeah, it is what it is. These are the two trades. Okay. Right. Abra, you're here as well. So Abra from Algeria. Hello, how are you today? I haven't heard anything from you, so I assume that everything is fine and you are working on your demo account. So here we are, out of the trade. After a long time. Yeah, we are a couple. We are a couple of guys, Mark. What are we? Like 10. 10. Which maybe I shouldn't say it publicly, but it's not 10,000, it's 10. But it's all good. All good. I'm happy. I'm happy you're here, and I'm not talking to myself. So, right, we've taken the adjusted take profit here on the left-hand side, and for the Dow Jones, I'm adjusting the take profit also a little bit, because we are coming to an end here at the trading session, and the Dow Jones is now, here we go, came all the way back, 32,900 points. And so where's the Vola box? I'm not looking at the number here, because that depends very much on the account size, but on the percentage number. So 0.3% for a good hour of live trading without having too volatile of a market here. But yeah, I think that's a reasonable number. We kept the risk, the position size very low. So nothing too fancy really. So I think this is a very decent results for 75 minutes of trading. That being said, are there any last questions from your side? I'm looking now for the second half of the afternoon. Very keen to see what the Dow Jones is doing. If it's breaking the next big number, and looking here at the DAX 15,000, it could become very, very dangerous for the markets over the next couple of days. But what does dangerous mean? For us box traders, actually quite the opposite. As long as we have decent volatility, it not only makes fun, but it's also very promising to do these kind of box trades. We keep the risk of not being in the market for too long of a time. We are just in our trades, we are out of our trades. We usually trade just during times of very high volatility, and then we leave it to others to take care of the rest. So that being said, if the market is, or if the DAX is coming all the way back down to 14,000, it's not good for the whole trading atmosphere in general, but for us as a box trader, perfect. So I see no open questions here from you coming in. Again, thanks very much for the time. Yeah, if the request is there from your end, I'm very happy to do that. Yeah, one more time over the next couple of weeks, yeah, it was great to hear from you again. Thanks, Mark. Greetings to Mallorca. Enjoy the warm weather. Thanks, Richard. And yeah, enjoy the afternoon. Have a good rest of the week, and I'll speak shortly. Bye bye.